All right, we should be live. Welcome back. It's Trader EXO here once again with another weekly live stream. Just give me a quick audio check in the chat that you can hear me okay and you can see my screen. A quick confirmation would be much appreciated. All right, fantastic. Good stuff, good stuff. So as always, special thank you to Oak Exchange for once again partnering with me for today's stream. As always, anything said in today's video is not financial advice. It is just my view of the market and how I'm looking to trade the market over the coming week until the next stream. Before we proceed, let me just bring something up on the screen. Hopefully this works. Okay, so let's talk about the mentorship. Should be starting in a few weeks' time. So let's just quickly whiz through some of the updates. So first things first, in today's video, in the description, I've left a link to a poll. If you guys and girls would be kind enough to fill this in, it's essentially asking you what's your preferred platform for me to deliver the content once we go live with the group. Is it Substack, which is my preferred option, simply because I find it as a very, very good way of organizing content, videos, sharing my thoughts. It's less cluttery. It's easy to, like I said, section and subsection and categorize items. The second option is private Twitter. Again, I'm open to that. If people prefer a closed private Twitter group, I'm happy to launch that and add those members who are eligible to that. Or third option, my least preferred, is probably private Telegram. Like I said, most of this will be read-only. It's just me sharing my thoughts. It's not going to be so much two-way interaction. If it is Substack, there is obviously occasions where from time to time, you know, I may have two-way interactions, or if there's any questions, that's fine. Preferably, I would like to have the Q&As on the live streams when I do the live streams. Alternatively, same on private Twitter, over a private Twitter feed. I know many of you use Twitter actively on a daily basis, so if that makes more sense, then please do let me know. But like I said, Telegram, I'm not really a Telegram proponent. I generally tend to stay away from it just because of all the unnecessary noise. So if you could just please, at the end of the video, the link is in the description or on the page, as you can see here, just go ahead and fill that in. I'd be very keen to understand which way you guys want me to proceed, and it's just trying to create what I feel is hopefully a very good learning experience for you all. Remember, this is a free private group. The only criteria is that you sign up using the referral link in the description of the video, and as I've stated before, all proceeds and profits will be going to charity. And yeah, so basically, in a nutshell, it's going to be quite intense, but what I want to do is really give you a holistic overview of my journey, what I've, developed, how I've developed, and what some of those processes look like. I feel as though trading is a very complex industry. It's a very complex career, and sometimes it's very difficult figuring your way out. So what I want to do is just give away as much information as I possibly can into some of the process that I use. So what does my trading manual look like? I will probably be sharing a watered down version of this. I want you to go away and hopefully find some inspiration to start coming up with your own trading manual. What my trade planning and life cycle looks like. So, weekends, on a Sunday, how I break the markets down. What are some of those checklists that I go through? What are some of the trade criteria that I go through? So I want to go through that process, and also the life cycle of a trade. So from trade initiation, planning, through to execution, through to trade management, and then journaling and burning down after the trade. So kind of closing down the trade and how I manage that and the mental aspects of that. And then we'll move on to, once we've got the trading manual and the trade planning aspects in place and the kind of the foundations of that, we can then go into looking at trade systematization. So basically, what are some of the strategies that I trade? You know, other than just ranges, but also looking at trends, maybe understanding which oscillators I use and why. Then we'll look at some of the options of like price, time, flow, execution strategies. So now that we've got a trading system, we've got to understand what price action means, the time in the trade and the context environment, how I use flow, and also when it comes to the most important part is putting the trade on, is your execution strategy and reasons to get out of the trade as well, okay? And then obviously once we've got the foundations in place, a continuously logical progress. You'll see me sharing trade setups from time and time again. And again, like I said, it's as and when. This isn't a paid group. This isn't a signal service. It's just something that I want to give back to the community for all the support that I've had over the years. And it's just something, you know, like I said, to educate is to learn twice. Second part, so the structure of this, like I said, it will be launching on the Monday the 24th. In terms of structure, it will be 2 to 3 private streams a week. Whether that's a live stream, whether that's recorded, it'll probably be a variation of the two. What I want to do is go back to the classic Sunday market reviews that I used to do. So basically, talking about the macro, talking about global markets, covering bonds, indices, NASDAQ, Bitcoin, dollar, equities, to give you that, again, the overall picture of the markets, how I'm viewing the markets, what some of the macro information that I've absorbed and breaking it down to you guys, and just sharing my short-term views and my mid-term views. So we're going to do that every Sunday for 2, 3, 4 weeks. Then we'll cover some of the slightly more advanced concepts, probably in the final week. So the basics of auction market theory. We'll start including how I use order flow and footprints for trade execution and strategy, or looking for those key inflection points and what some of those strategies are. And then obviously just a very simple primer on market profile, how I use it, when I use it, and where to use it, which markets I apply that to. And hopefully that should give you enough of a foundation as to basically what I would describe as 9 years of my journey, and try to present that as a compressed, digestible way for you guys, and hopefully kick on in your own career. And then after that, I think the last public stream will be on Sunday, the 23rd of February. I will be taking a break for maybe a month or two. So I can't really envisage myself streaming publicly and throughout March, probably not in April as well. There's a few aspects in life that I want to focus on, as well as my own trading challenges that I've set for myself. But like I said, my last public stream will be on Sunday the 23rd. I will then commence with the private group on Monday the 24th. That shall run for a period of 4 weeks until Sunday, March the 23rd. So I hope that kind of gives you an insight as to some of the content that I'll be sharing and some of the educational paths that we'll be going down towards. So it's going to be touch on every facet of trading, such as, you know, basically how to create a manual through to journaling, through to how I do a market review, how I do a full breakdown of charts, what are the key check boxes that I look for before I even take a trade, pre-trade, planning the trade, getting ready to execute the trade, when I'm in the trade, post-trade, when I've closed out the trade, what the process is then. And then we'll look at some of the more psychological aspects, how I manage my emotions, the aspects of trading psychology. I've got a 60-page manual that I've created myself by referencing various trading books out there geared around trading psychology. So hopefully I can share that with you guys and basically give you a deeper understanding of the basics of trading psychology, and why, for me, over the years, I've come to appreciate that trading isn't really about how good you are technically. It's really about your discipline and your emotions. I would even argue that 10, 15, 20%, once you become proficient at trading, or technically very good at trading, why do you find that those who are very, very knowledgeable and technically gifted fuck up time and time and time again? It's clearly not a technical issue. The issue is the psychology, the mindset, the patience, the discipline. Your biggest edge is yourself. It's not the systems or strategies that you're trading. You can give, so I could give, or somebody else could give you some of the best trading strategies, but can you execute that? Do you have the mindset the patience, the discipline to stick to those rules, right? How often have we seen yesterday as an example when Bitcoin dropped? All right, it wasn't a significant drop on Bitcoin, you know, from 99 to 92. Ethereum absolutely shit the bed. Alts were in complete carnage. And once again, we see people blowing out. I mean, should people really be blowing out? Like I said to you, it only takes one bad trade to wipe out your account. And this game is all about survival. So ultimately, just some of the mindset, some of my own lessons. I've blown accounts in the past, in 2017, 2018, 2019, when I was learning how to trade, and I had nobody to guide me. And eventually, you find out that this trading is certainly a much more structured, disciplined approach. You have to understand all the various facets of trading, especially risk management, and talking about position sizing as well, and how I calculate my position size. So these are all the many little small facets that I want to touch upon throughout these 4 weeks, and hopefully, like I said, if it helps improve you guys, then great. I've kind of achieved my objective. I'm not looking to monetize this at all. It's just something that I want to do, that I've been wanting to do for quite some time, and there's no better opportunity before I head off into Q2 and Q3, take a break from socials and just focus on my own aspects. So last stream is on Sunday the 23rd publicly. So after that, 4 weeks, like I said, it will be private behind closed doors. But just in the comments, let me ask you guys, what is your preference? Would it be Substack? Would it be Twitter? Would it be Telegram? If you don't mind just replying in the comments, I'd be really keen to just get a quick overview to what your thoughts are in terms of where you would like me to really host some of this content. What's the deadline? Well, basically the deadline, I guess, look, I mean, this poll runs for another 6 days. So looking at the calendar, I'll really start rolling out the sign-up process from next week. So basically, if you want to sign up today using the OKX registration link in the profile, then go ahead and do so. But I'll cover that in more detail on the next stream, which is probably going to be on... I might just be doing another stream on Saturday or Sunday, if not before. So that still gives you 2 weeks to sign up before we go live on the 24th. Ideally, I'd like to have everybody enrolled by Sunday the 23rd, because it's going to be a ball ache with all the admin, making sure that you've met the requirements to join the group. I've then got to add you manually into the groups or into the group and make sure that everybody is on board as well. If you're late, not a problem. You know, I'm not strict. If you're late by a couple of days, just ping me a message or we'll figure it out. But like I said, from next week, I will have a Google form. So as you complete the registration form, please do fill in the Google form. What I will essentially need is an email address and your user ID with the exchange that you signed up for, deposited and traded. So the two partnerships are OK Exchange and Prime XBT. So like I said, I'll have further information next week, and we'll certainly start the onboarding process from Monday the 10th. All right. Let me just have a quick read of the chat before we kick off the stream today. No, I'm not going to do Discord. It's just a pain in the arse to manage Discord. And like I said, I'm trying to keep this more intuitive via the streams and the live streams and the recorded sessions. I'm not really looking to have a two-way conversation because it's quite time consuming. It can be very, very distracting. And like I said, there are paid groups out there that allow you to have two-way interaction. Unfortunately, I just don't have the time to do that, and that's why I would never consider running a paid group in that respect myself. If it isn't monetized, how is it private? Well, it's basically in partnership with the exchanges. It's with OK Exchange and Prime XBT. If I'm being completely transparent, you guys sign up with the exchange referral link. Again, I'm not looking to profit from the referral links. All money will be donated to charity at the end. And also what I'd like to do actually as part of that is to do some giveaways. So some funded accounts, some prize giveaways and money that's also account giveaways and giving away some money as well, just to giving back to you guys as appreciation and thank you for your time. No, Discord isn't an option, like I said. You know, so just, yeah, like I said, we'll see where we are. Fill in the poll. Please do fill in the poll. It's very, very important because I would love to know what your guys' thoughts are, okay? What about the people who can't sign via Oak Exchange? So, like I said, when I launch the Google Forms next week, if there are technical issues, there is an option, there will be options on there to leave a comment, and we'll try to get those resolved, okay? But I will need an email address for correspondence. If you already have an account, yeah, you'll have to figure something out there. I mean, whether that means... I'll speak to the Oak Exchange team and Prime teams, whether it's easy to switch the referrals across or not. You've blown your account on Oak Exchange. Well, I'm not too sure what to say there. That's fine. If you can sign up trading spot on Oak Exchange, that's fine. It doesn't have to be futures. I've spoken to the team. I've explained that not everybody has access to futures. So if you want to continue with the sign-up process, and sign up just for the spot market, that's good enough. You know, you're not enforced to sign up via sign up for futures. You can't fill the poll because VPN. Yeah, I've restricted VPN users from voting just to stop people trying to spam the votes. It generally tracks via IP address, so when you can switch VPN, you can obviously spam the poll. So just switch your VPN off for a moment and just hit the poll and switch your VPN back on again. It's just 1 second. It's not going to track your IP address. I don't have access to those details. All I have access is just to the results of the poll. Okay. If OKX is not allowed in my country, how can I join the group? Like I said, we'll cover that on the next stream, okay? It's just today I just want to focus primarily on getting an idea of as to where you guys want me to host this. Like I said, my preference is Substack, but when it comes to questions around signing up or not being able to sign up, we'll have a Google form up so you guys can potentially resolve some of those issues. All right, let's crack on then with the market review. I don't want to go into too much depth and detail today. I think, where do you guys want me to start? Essentially, there's so much that I could talk about, such as liquidations, but I think that's been well documented. We've had the move to the range lows. I think this is going to be a very short stream, in all honesty. Looking at the markets, well, I say short stream, but it always ends up being an hour long. But looking at the market, I think ultimately we've still got the two key levels for me. Is essentially, let's start off on the monthly. Let's start off on the monthly chart. Okay, on the high time frame. Here we go. So essentially, using the high time frame range. Now, I'm going to ask you guys a question. And again, I'd like you to reply in the comments. How many of you believe the top is in for this quarter? And that we're likely to see lower prices in Q2, Q3. How many of you believe that we are likely to go up to the level of 115, 120 in the next several weeks by the end of Q1? That's one question I would like to understand. So when I talk about a top, I'm not talking about the top on Bitcoin. I'm just talking about contextually over the next several weeks. Do you believe we have one more push up, or do we continue just ripping high to 140, 150? You know, how many of you think that there's a probable chance that we are close to a interim top before we get a corrective move down and potentially we could continue higher over the next year or so? Yeah, interesting. I was just trying to gauge sentiment, see what the sentiment is in the chat more than anything. It's in my honest opinion, I've really shifted the way I think about markets. The old XO probably would have been more predictive, more vocal about the top is in. Nowadays, I honestly couldn't give a flying fuck. I don't care if people are calling top. Like I said, there's no good. What good is it calling a top if you're not going to act upon that information? And secondly, when people do call the top, what are their suggestions? What's the actionable event? If they can't provide an actionable event other than just stating the fact that, oh, the top's in, well, what does that mean? You know, for me, at the end of the day, as a trader, I don't really think about, oh, the top could be in. When I think about a possible risk scenario, I'm thinking of downside risk. And if there is downside risk, then what does that mean for my positions in altcoins? What does that mean for my positions if I'm holding Bitcoin or Ethereum? Okay, that's essentially what I look for. I don't really care too much about is the top in or not. I'm asking myself, at which point do I need to be aware of the downside risk? And for me, in all honesty, when you look at the chart, we'll go back to the monthly here. But when you look at the high time frame charts, you can see price is just about holding that 0.75 level at 93k. Okay, round about 93, 93.5. That is a key pivotal SR level. We have not had a monthly close below that level just yet. Then when you look at the weekly, again, something that I alluded to last week and on the timeline today, that we haven't had a weekly close below 93k. And every time price comes into this zone, you can see from the wicks, buyers have stepped into the market. Now, the caveat to this is that obviously, very simply put, that in order for us to see higher prices, it goes without saying that ideally we want to see this level of 88, 90k hold. Okay, so again, I don't mind if price trades back into this level one more time, but I do need to see a reaction from this level such that price closes back above that key level of 93 to open the possibility that we could be heading back to the highs and taking out 110s into 115, potentially 120s. Okay, maybe that might be a scenario which plays out. But like I said, it's not me predicting what the market is going to do. It's a scenario that could be on the cards, right? If price trades into that 88, 90k level, gets back above again, you want to see strength to give you conviction in the possibility and probability that buyers are stepping into this market and the macro conditions are conducive to price potentially rallying higher into at least taking out these highs. And if we can get above there, then great. We'll talk about the next logical level, which is at 115, 120 level, which I think is going to be a real sticking point. Okay, so I think for now, as you look at the market, you have to be fairly honest. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks of price action within a range. And there's still nothing that I can gauge considerably in terms of a direction. Now, I know comparisons have been made to what we had in summer, right? And I think that the distinguishing difference that you have to think about is there's a reason why I was leaning more bullish. And we saw many, accounts talk about the fact that Bitcoin's making lower lows, lower highs, and this is bearish, and we're likely to see continuation lower down. The thesis that I had is the fact that, look, the fact that we've had Bitcoin trade into this high in March, we never once took out the high, lower high, lower high, lower high, lower high, lower lows. It wasn't a trend. It was a rotational move lower down each time, but within the confinements of a range, okay? And because we had these untapped highs, I really fancy the probability that eventually when Bitcoin does trade back towards the highs, we take out these highs and continuation higher. What's different about this instance is that, well, we had the high back in December. We did trade above the level, whereas here we never had that, okay? This was the high in March 2024. We never attempted to take that out before we rolled over. Now, historically, when you look at what Bitcoin does, okay, and this is where I'm just trying to give you food for thought in terms of, could the top be in? I'm not calling for the top, and it doesn't matter whether I call it or not. All I need to really care about is the risk to the downside should the market break down. And you can see Bitcoin has this tendency to take out the highs, pull back, go again, take out the highs, and before it finally rolls over, okay? Same happened in October, November. We got the highs on Bitcoin, cleared out all this, closed back under, one last attempt, and then we finally rolled over, okay? So that's why, in terms of context, is the top in? That there's a decent chance it could be in, right? But it's still fairly too early. I guess we won't really know. I don't have a crystal ball. I can't say definitively whether the top is in. But as far as I'm concerned, when I'm looking at the market, look, we're still holding this range here. We're still holding these lows. So every time price is going to come into this level, I've longed. And so far, it's worked very, very well for the trade setups that I've shared, the plans that I've discussed. I've never once talked about shorting this market below this mid-range. The only time I've talked about shorting the market was here as a hedge against my spot. Or if those of you who wish to trade perps, and I explained the way you want to do that and how to execute it, is that you want to see a swing fill of the level, and then for price to revert back to the mid, if it's below the mid, then we target the lows, all right? So ultimately, all I'm saying is I don't really have a clear direction. I wouldn't want to call the top. I think there is certainly a reasonable argument for there potentially being a top, but we don't have enough evidence to conclude that the top is in, okay? And generally, like I explained with XRP during the week, when I shorted XRP, I didn't say XRP the top is in. For me, it was a very good trading setup. I see exhaustion in the $3 range. And if that's the top, if I happen to short the top, then that's just a result of the fact that I managed to position into the trades, recognizing exhaustion, and implicitly, as a result, it happens to be at the top. So I'm not trying to time the top or catch the top. I think you have to give yourself a chance of being in the trade first and just respecting what price is doing. So if this is the high and you caught this and you're still in the short, then great. You've given yourself a chance of nailing the top. And if it doesn't, well, guess what? If you don't take profit at some point and price trades back up, then you just have to accept that, okay? If you're going to round trip this all the way, you're going to round trip your short and watch price come all the way back up, then that's on you. But ultimately, how I've positioned for this is that my spot position still remains hedged, and I'm just trading on a perps account, okay? So I really don't want to delve too much about the whole argument and debate about a top being in or not. I just think, look, ultimately, it's irrelevant whether the top is in or not. You just have to manage your risk and be prepared that such that if price does break down below, we start getting acceptance below 93k on a weekly basis, then that is a cause of concern, because any underside rejections is probably going to lead to continuation lower down into this next level of 72, 75k. Okay, that's kind of what I think would be the next logical level. But without further ado, this is the key level that is holding our support. It continues to remain our support. Any questions? Yeah, I'm still, look, like I said, Marcus, a question Marcus is asking me, are you still holding your 53k spot? Yes, I am, but I'm hedged at 110. Well, 109 to be precise. And we talked about the reasoning, the thought process, and why I was looking to hedge out my spot positioning here, okay? So for now, I'm delta neutral. I've locked in the gains from 53k without having to sell my spot. And the reason I've done that, it's not often that I hedge trades, okay? The reason I've done that is because I'm cognizant that, look, this could potentially be the top. I don't know if it is, but ultimately it gives me the flexibility that, all right, if the top is in on price, rejects and breaks down, that's fine. I can cut my spot position and ride the short down and look to profit on the market. I haven't made any money on the short in this region, right? But what I have done is locked in the gains all the way up, okay? Now, if I was to cut my spot position, should we get a breakdown, this is where I can start profiting from the short into that 70, 71 level, or maybe it's just down to 85s. I don't know, okay? Going to take it from one zone to the next. But ultimately, let's just assume that I am, I'm hedged, and let's just assume that I personally want to see Bitcoin trade or hold this zone here and push back up into the highs. The minute I see Bitcoin pushing back up here, I'll remove my hedge, because I then think the probability is that we could get one more drive higher And who knows how high that could be. It could be 115s, it could be 120, it could be 125, it could be 130. I want to capitalize on that as a continuation trade. Should my short hedge be closed out, I can ride momentum higher, okay? That's what I would be thinking. So I hope that explains the question that you asked me with regards to am I still holding my 53k spot? Yes, I am, but regardless of price going up and down, it's not making a difference on my P&L at this moment in time. I've locked in the gains. So the spot is more of it just gives me more flexibility as opposed to fucking around with my spot position, buying, selling, buying, selling, selling, buying. Maybe I start FOMO buying at the highs and I puke my position again. It just affords me that level of insurance, I should say, or comfortability that I can just let the market play out and start trading on my Perps account, looking for those rotational plays because price is in a range. Okay. Yeah, I mean, there's a question here about OK Exchange. Yes, they are. I think they've got the Mika license, so they will allow members from the EAA. So yeah, you should be able to sign up. What are my thoughts on Marcus Rashford joining Aston Villa? He's gone to a better club. They're above United, so fair play to him. He might get Champions League football next year. He's not going to get that at Man United, is he? Okay, so in terms of the higher time frame context, let's just quickly, again, go over the stock. I think this is really interesting. The fact that the daily is at the low. So again, I'm not overly bearish just yet. You know, I'm just looking at price objectively. I'm thinking about trade ideas. I took the trade yesterday. I've closed the majority of my trade. I took 50% at 101.8 and I took the remainder off at 100 today when price started breaking down. So I'm fully out of the trade now, okay? I managed to get a long in from 92.8, just under 93s. Took that to 101s for 50%, closed the remainder at 100. And that's all there is to that. So in terms of the daily stock, this is hovering at the lows. If you look at the weekly, now, I talked about the fact that, look, if you recall in the previous stream, or the last two streams, I mentioned that if Bitcoin is going to go higher, then with the stock RSI at this mid-level, you will likely to see strength in the market with a confluential factor on the stock. If this crosses back up, then the possibility would be we would have rallied significantly higher. The alternate scenario that I said is that, look, okay, worst case scenario, and I remember this from a week or two ago, that look, if the RSI, the stock RSI, starts drifting lower down and price can remain holding this support level, I think that's positive. And I will be looking to attack the market from a long perspective, okay? Rolling it forward, you can see that now you can see that the stock on the weekly has not quite cycled to the lows, but we're not too far away. So the next question is how much time is this likely to rotate and oscillate at the lows? And hopefully, can Bitcoin hold the lows at 88 to 90K? All right, that's what I'm looking for, building a base. And again, I talked about this on today's timeline that I would like to see Bitcoin, I don't mind Bitcoin trading back towards that 88, 90K level. As long as it can hold the level and build a base, I'm going to be looking for longs because it gives me a clear invalidation that if we start seeing acceptance on the weekly time frame below 93K, then I've got to start thinking about, all right, what is the probability of now price breaking down and trading into that 80K level next, or 85 or 80s, okay? So we'll cover that in terms of setups on today's stream, but that's kind of the thought process with the stock. Is that clear? Any questions? So we're not too far away now. I would ascertain or assume that probably another week or two before we start seeing a bottoming process, and maybe that takes us into mid-February for a bottom or a local bottom in Bitcoin, as long as this can hold. If it doesn't, then I think that's a major shift in structure. I really do. I'm not going to be talking on alts today, just primarily focused on Bitcoin. Again, when you look at the weekly RSI, it's fine. It's above 50. That's not too bad. Daily, when you look at the daily, it is hovering below 50. Now, generally, okay, when I see the daily RSI hovering below 50 and remaining below there, that to me is evident that there is somewhat level of weakness in the market, okay? And I would only be comfortable in terms of really picking up the momentum and being aggressive, such that if Bitcoin can trade into these lows and the RSI can just hold off here, push back above the 50 level, show me strength, then I'll feel more comfortable about the possibility that we could go back towards the range highs, okay? And then hopefully and some to 115, 120. So that's what I'm looking for. But however, if the RSI is continuing to show weakness and price is breaking down, it's a weak reaction, we get a limp bounce and it starts breaking down into another lower low, then I think there's a real possibility that we could break down into that 85k level, okay? So the key for me is not so much this demand zone anymore. I would say the key for me on a daily time frame is perhaps more this demand zone here. Could it be the case where, when you look at price action, in terms of what I'd like to see, in terms of a reaction, if there is a deep pullback, does price come in and take out this low here and this low here? And should it do that, what you want to really identify in the next 10 days is that, all right, we don't mind price coming into this level, but are there enough passive bids resting in the book such that when shorts aggressively start opening into this level, or there's an aggressive level of spot selling being absorbed along with shorts piling in at this level, and they're unable to push price lower down and price reclaims back above that level, that is a trigger that I will take. Because watching the flow, watching the tape, watching the footprints, I want to see shorts really piling in but unable to push price lower. Bids are absorbing all that selling, and when these get caught offside, they're going to impute their short position, and you'll start seeing momentum longs pile in, and that's what gives you these fast moves up. Okay, fast moves up. It's essentially what we had here when I talked about the fact that I'm looking for price to take out the lows here. That's what we got. We had a very, very fast move back up to the highs. Okay, so something similar. And is that going to give us what could potentially be the upthrust after distribution before we get a breakdown again? Okay, remains to be seen, but just something to keep in the back of your mind. However, if there is aggressive spot selling and shorts opening, and we're likely to see again liquidation of longs, the question is this level going to hold, and are we going to reject on the inside and continue lower down? Then you've got to be open to that scenario as well. Okay. So I don't know what's going to happen is the honest truth, but all I can talk about is the levels that I'm focusing on and how I'm thinking about price, what I'm thinking about in terms of real-time trading. So many of you ask me, hey Exo, what time frame do you execute a trade? Is it the 1 hour? Is it the 4 hour? And again, I don't look at 1 hour candle closes or 4 hour candle closes. I will pay attention to something like a weekly pin bar close, right? Because that often is a sign of a reversal or potential reversal. You need to see continuation on the next candle. But what I generally refer to in terms of execution is non-time based. Okay, so I'm not looking at the 5 minute chart or the 4 minute chart or the 1 minute chart thinking, all right, has the candle closed? I'm looking at the flow of data and reacting. So the key phrase for that, if you want to look this up, and we'll talk about this on the private sessions, is non-time based execution. Okay, I can't get the text tool up, so I'm not even going to try to type up yet. Forget that. But non-time based, not time based, but non-time based. Okay, that's what I look for. If you're not sure what that is, Google what is non-time based trade execution. You'll figure it out. Moving on to a slightly more refined chart, I think what we have is, and what I think we could continue seeing, is the high of Monday, which was also very close to the previous Monday high. Sorry, that should be Monday's high. And we've got Monday's low. So I think, above all, I do believe that this is the range that we're going to be contained within for the next several days or so. So you've got Monday's high, you've got Monday's low. And when you look at the monthly open, again, why did I take profit at that 101.8, 102 level? Well, surprise, surprise, there's your monthly open, okay? At that same point, just where Monday's highs were, that's essentially where the monthly open was. And that's the reason why I aggressively took profit after the bounce that we had yesterday, okay? Fairly good bounce into the highs, into monthly open, essentially where we were rejected from. That was good enough for me, all right? So now we've got Monday's high and Monday's low. The key levels that I'm thinking about here is, look, contextually, we are finding resistance at the mid-level. So we've got December's low, we've got December's high. This is predominantly where price has been trading. We've traded above the mid, sharp aggressive move. We found resistance and acceptance where, remember the key range that I talked about in the previous week's stream was this zone here. This is a previous trading range. We now find ourselves back within there. And I think probabilistically, I think we're probably going to be contained within this range. And what I would be looking to find is, are we likely just to find some sort of base building here? Are we likely to run December lows, take out this low, take out this low? So again, when you're looking for a possible demand zone which may hold up, it's that daily block somewhere here, okay? Essentially, you want to see price, if it is going to break down lower, trade into here very aggressively, quickly reclaim back above this swing low here. That's going to be my trigger to get in, stop at whatever low this is. That's my trigger, and I think I would be looking for price to trade back into the mid, okay? Into that mid, round about that 100k level. And I think if it can do that, I would then give it every possibility that, right, we could go back to the highs for a third drive, okay? We've got one drive here, two drives here. Are we going to get a third drive somewhere up here? Okay, that's kind of what I keep leaning towards. Is it really the case where we're just going to break down and shit the bed over the next few weeks? I'm not sure, okay? But I am aware of that downside risk. And that's all, in all honesty, that's the best I can do. I don't have a crystal ball, but I can tell you exactly the levels I'm looking to trade and why. So the two scenarios here are essentially such that if we can take out this low here and this low here, extreme scenario, where I think once again you're going to see aggressive bearish sentiment on the timeline, panic and fear, but price essentially comes and trades into this demand zone here on the daily. Like I said, what you're looking for is price to reclaim back above there, stop at the lows. You want to see acceptance back above the December level, back above Monday's low or the previous Monday low if it's next week, into that mid-level. That's a fairly good trade, okay? Now the question is, XO, what if that doesn't happen? What if we don't get the sweep of the lows? What are you going to do then? Like I said, it's not just one scenario. It depends on what price is doing, right? So ultimately, for me, when I look at this daily level here, this daily block, the key thing for me is that we've had this low here. Are we likely to backfill most of this wick? And again, if we do, there's two ways that I will trade this. Using Monday's low or Monday's range. And this is where I talk about trade execution and trade strategy. So please, I think this is really important to listen to. Is that what happens if the cases where we don't take out this low and we don't even take out this low, yet you're waiting for that scenario that I talked about, sweep out these lows, reclaim back above. Yeah, sure, that's probably the best setup that you're going to get. But sometimes what you find in these instances is that price will drift lower and just stop short of this low here, okay? And push away. In this instance, the strategy for me is very, very simple. What I would then do, if I can just clean up the chart, if I was to drop down into the 4-hour time frame, just to illustrate the example that I'm talking about, is something like this. So when I talk about trading the extremities of a range, whereby I have the range high, the mid-range, and the range lows, okay? When I talk about doing business, I always talk about doing in the 25th percentile or the lower bound of the range. So anything into here, and it pushes away, looking for that shift in microstructure, a higher low. So you get the lows, you get a higher high. Okay, there's a low, there's a higher low, pullback. Sorry, there's a higher high in context to this swing. Higher low, that's going to be the trigger. So this to act as a block to hold, trigger to go long, all right? Because we didn't get that deviation or that swing fail or that sweep where price takes out the previous candle, closes back above it, you get the stop at the low, back in the range, continuation higher. So you won't always get this scenario. Sometimes price will stop short, consolidate. And that's where I'm not thinking about a swing fail strategy or an SFP or trap traders. This is where the subtlety of execution comes into play. What I'm thinking about on the lower time frames is, all right, can price come down? It stops short of this swing low here. It starts pushing away. Okay, pulls back, gives me a higher low into this block here. That's going to be the execution for me to get long, all right? So it's kind of like where you got swing, swing. There's your high, there's your lower low, lower high, lower low. Push back up. Did I say that right? Low, lower low, lower high, lower low, higher low into the block or a pullback into a higher low, shift context, time to go, okay? And what you ideally want to see is some level of wicks on the daily being printed, okay? That's what you want to try and identify. It's actually very similar to what would have occurred here. I didn't take this long, but again, if you look at this, look how price just stops short of this level here, right? Just stops short. Now I'm going to break this example down. In this instance, you had a very clean swing fail on the left-hand side of this swing point. These are my favorite because it gives you such a clear invalidation. You've taken the liquidity or what you assume is going to be liquidity. Traders get trapped, price reverts, rips the other way. But what do you do in this scenario? Ignore what happened after this, right? Up to this point. I want you to just focus on this part here. How can you execute the trade here? Have a think about that and think about what I've just said. When you go down onto the 5-minute chart, and again, what did I talk about? When price comes so close to this here, and this is all you get. Okay, you wanted to see a sweep, but you never got it. But what did I just talk about in terms of market structure? Look at the current structure of swing points. There's your lower low, there's a lower high in reference to this. What does price do? Prints the higher high, gives you the pullback. This now acts as the demand zone that you want to see hold. Your stop is at the low, your execution is in here. This is where you want to take the trade setup, all right? So a long position, scaling in, stop at the lows. You could argue that you could take a partial position fill here, partial position fill here, and you're looking for price to trade back into that mid zone. That's how I would set up for it. Again, look at that subtlety in shifting market structure. Now, what if I was wrong, okay, in this instance? What if I took the long here and price starts breaking down? That's fine, because at that point, if price is breaking down, then I know in my mind that, okay, look, I don't know what's going to happen next, but I'm going to bet on the possibility and probability that we run this low here. And if we run this low here, what other lows are we likely to run? If you look left, could it also be that we run this here and this here? Swing fail this. That gives me a better entry or a better probability that now I can take a second attempt because this level never held. It started rolling over. I cut the trade very quickly. I now anticipate that, all right, we could run these lows here next, run those lows, get back inside. Now I'm trading the swing fail. We've taken out this low, get back in the trade, long again. So again, keeping the losses relatively small, you're not just going to long the market and think, right, I'm not going to have a stop here. I'm just going to, I think this is low. Price goes up, and before you know it, just assume it didn't go up. It rips down. You've just lost a big chunk of your account because your risk management absolutely dog shit poor. So really, it's about execution, and that's why I talk about the 3 strike rule. Sometimes you have to appreciate that trade execution is very, very difficult because you can't quite figure or feel, just looking at price action, which level is going to give you that reaction that you need to see. And that's where order flow footprints kind of gives you some form of an advantage as to what's actually happening under the hood, what's the delta, what's the positioning, and then you want to use that as confluence, just as you would perhaps use an oscillator of your choice that's actionable. That's where reading the tape, reading the order flow comes in. And it's difficult to preach that unless I'm recording the screens in real time and then going over it in hindsight. This is why I executed, this is what I looked at it, and that's why I hit the long, okay? But in this instance, it's not a definitive crystal ball that's going to make you into a pro trader for the next 10 years of your career. It's just a tool of confluence that you use in confluence with price action. So I hope that makes sense. So when it comes to these situations that I don't know for certain if this is going to be the level to long, okay? What I am doing is giving myself a chance of that. All right, I think there's a probable chance that we might push away, but I'm open to the possibility that I don't mind taking a small loss or getting stopped out, risking 1%, knowing that we could run this low or this low. And then if those lows get run and I see shorts piling in and there's a strong wick and it finds acceptance back above, then I think there's more possibility and probability of the trade working out in my favor. Okay, strike 2 or strike 3. It's a very difficult skill to perfect, is trade execution. You're going to find yourself cutting, chopping, and trying to get a feel for it. But eventually, the more you do it, the more you become accustomed to trading. There are other ways. This isn't the only way. It's just my preferred way. You can potentially scale in and hopefully that you get 1/3 of your bids filled. That's also fine. Others may just punt on the fact that, yep, these are the lows here. I'm going to leave my bids here. It doesn't get filled. Price goes away. Tough shit. That's just the nature of the market, okay? Does that make sense? So the subtleties of trade execution and price action, and understanding when to use which in which environment and what the context is for trade execution. So the key is, if, for example, just to summarize, we don't get a run of these lows, what you want to see is that shift in structure. If this is a trend down, you want to see price break microstructure into a higher low. This is the block that you want to see. It needs to hold, push away, scale, go for it, okay? Otherwise, cut, because now we don't know if we're going to break down further or if we're going to swing fail these. It's a game of probabilities. Swing fail, get back inside, long. Go for the highs. Go for the mid, then go for the highs. All right, subtle, absolute fucking subtleties. Okay? That's what trading is about. Not some tosspot telling you, oh, guys, yeah, this is support. We really need to see Bitcoin hold this level. If it doesn't, then that's a real concern for Bitcoin bulls and bears will be in control. Doesn't tell me anything about execution. All I know is that, look, here's a demand zone. Obviously, this needs to hold. But what am I doing as a trader? You're not telling me what I'm doing. All you're giving me is dog shit analysis, which you can teach to a 16-year-old. Identify a demand zone and say, all right, guys, here's a demand zone. It needs to hold support. Thank you very much. Here's $1,000. Thank you for subscribing to my paid group. Big deal. Doesn't tell you about how to execute the trades or what to think for, what to look for, right? And again, I'm not having a dig at anybody, but I'm just telling you from my own experience of, like, I want to give back to those who are aspiring to trade what I wish I had to learn. And I'm not the only one. There's some great traders out there that stream. There's BTC Charlie, there's SC, there's Trader Magus. There's a bunch of guys who talk about how to look for price action, how to look for shifts in structure, what to identify, okay? So I hope that makes sense. Just more educational. I'm not saying that this is going to be the low, but I'm just trying to give you guys tips on how I look to execute price. In which scenario do I execute a swing fail? In which scenario do I aggressively attack a higher low, but it never took out the lows? You've got to have a couple of ways to execute. You've got to have some strategies. Strategies alone just for execution. Now, having said that, wouldn't it be a shame if this just all goes to shit and Bitcoin breaks down, underside reject, and we get that? Then it is unfortunate, but that's just the market. I'm positioned for that case, okay, by hedging out. And that's all I can do. I hope it doesn't happen, but the reality is it could happen. And that's not my decision. I have to respect what the market does. The market doesn't give a fuck about what I think. The market doesn't give a shit about my trading opinions. The market doesn't care about my trades. It doesn't know who I am, okay? So you have to be respectful about what the market will do next. It doesn't owe you anything, essentially. My gut feeling, honestly, here's the thing. My gut feeling is, I don't know. I honestly don't know. I don't know. I think there's arguments for a possible top being in, but that's not actionable. If I think the top is in, it's not actionable for me. In fact, I've already actioned upon that by talking about hedging out at the highs 2 weeks ago. Okay, so that is my action. I don't know if the top is in, but I've positioned for that. Should it break down, I'm going to cut my spot below here if I have to, and if it means rebuying my spot, if this is all just a deviation and we get back inside, then I'll just rebuy my spot. If I don't get to rebuy my spot, fine, I'll just profit on the short on this leg down here. I don't know. It's a game of probabilities. Right, let's move on. Let's move on to. I've actually missed quite some important aspects here. So looking at the trend scanner on the daily, I'm just going to draw an arbitrary line here. Let's just assume this is, I don't know, where's December's low again? Oh, it's over here, isn't it? This one here. Okay, that's December's low. Again, let's just start top down. I mean, when you look at the weekly, 12, 25, 25 down at 85, okay? Where I think the probability of a top increases is, like I said, when you start getting compression of the bands, okay? When you start seeing the momentum dissipate and price is doing this, and this is rolling over, then that increases the probability. But for now, I have to respect the trend. I want to flow in the direction of the market, okay? One thing that I've really focused on, and this is why I generally believe that my trade selection, my trading performance over the last 16, 18 months has been fantastic, because I've decided to go with the flow of the market. I'm not trying to counter trade trends, okay? This was different down here whilst we were range bound for the best part of June 2022, all the way through to October, okay? Since October 2023, I've rarely talked about aggressively shorting the market. I've only ever talked about hedging at the highs. That's all I've ever talked about. I've never talked about explicitly shorting the market like I did in 2022, okay? So for now, I'm respecting the trends. I'm giving the trend an opportunity to keep proving to me that the market or the context to flow in is on the way up. So I'm looking for those buying opportunities to hit the long. And again, there's going to be a time when I will be wrong on the long, and that's just acceptable. I have to manage my risk. That's all I can do, and take the loss. Because there will be a point where I have to shift context. And I don't necessarily want to be shorting at the lows. If I'm shorting, it's always going to be at the extremes of the range, at the highs, okay? Because the invalidation level is so clear that if price pushes up, I take the loss. But I don't want to be shorting this into support. I'd much rather say, all right, fine. If price breaks down, I cut my losses. I miss out on a short. Big deal. There's always another trade elsewhere. The first primary action is survival. Get the fuck out of the market and protect your P&L. Don't eat shit and draw down, essentially. So that's on the weekly. When I look at the 3-day, again, I like this, how this is shaping up. Again, if you look at the stock on the RSI, I do like how this is shaping up. You know, we are seeing, look, I've said before that when price is bearish and the RSI is rolling over like this, look at the move that you get down. But the fact that we've been oscillating lower and we still haven't broken down, and we've been here for almost, the highs were back in December, we're still within this range. Okay, there's nothing to give me guarantees that we're going to break lower down or we're going to break higher up. So I'm just going to keep trading the range until, if this curls around and this is support, then I think there's a good chance that, you know, we could essentially pop higher as well. Okay, are we going to get something like this? 117, 120. And then you get the swing fail or the deviation, then we get the breakdown. Okay, that wouldn't surprise me. XRP did something similar to this. Okay, a very similar pattern. Just note this pattern, note this structure here. I'll do it again for you guys, where you get price rallying up, and what it does, it just absolutely shits the bed, takes out these lows, and then gets back inside the range. XRP, classic example. The trade that I took, exactly what it did. Okay, it ran the highs, it got everybody fairly bullish and excited about the market, and the one thing it did, took out these lows here. That was a beautiful short that I took, and I might get to do it again higher up. So don't be surprised if we see something like this, and then you get the aggressive sell-off, and then a reaction back up again. It wouldn't surprise me. Keep it in the back of your mind if it does. Okay, just as you think this is bearish here, you think, oh fuck, you know, this is breaking down. If it breaks here again one more time, it's over. But essentially what it does is push up, hover, then it slams down and goes back up. Do I ever trade the news? No, I don't trade the news. I'm not a news trader. I feel as though you have to be at your desk quite often to trade the news. I'm just a discretionary retail price action trader who's learning every year. That's all I am. How do you balance the volatility with having a family? Quite simple, really. Trading the extremes. If you've known how I trade, when it comes to ranges for me are a walk in the park now. I know exactly what I'm looking for and what I need to see to execute the trade. That's why I think I've got a very phenomenal hit rate, win rate when it comes to rotational range-bound environments. And for me, it's always been at the extremes. Okay, it's always at the extremes where I've nailed the trades. Okay, that 25th percentile of the range low, 25th percentile of the range highs. Everything else I generally ignore unless I'm willing to take a high conviction, low time frame trade. But you can see one opportunity, 2, 3, 4, 5, 6 opportunities in 12 weeks. I've probably taken 4 trades on Bitcoin this year. That's all I've done. So already, 4th of February, this year alone, I've taken 1, 2, 3 trades on Bitcoin, a 4th on a short earlier today. That was an intraday short on my challenge account. I've closed that out for a couple of $1,000 gain. That was it. So 4 trades on Bitcoin this year. This was the very first trade that I took. Hedged at the highs, took profit. I wouldn't classify this as a trade. It's just a hedge against my spot. There are people who are saying we are not going to trade below 90k soon because the largest liquidation event didn't even make us go under 90k. What are your thoughts? I couldn't give a flying fuck what people think. All I care about is what the chart tells me. What other people say or think doesn't really matter. Again, what people say or think, are they giving you something actionable or not? Okay, that's all that matters. Yeah, just because Bitcoin didn't go below 90k when we had a big liquidation event, what does that mean? Can they say for certain that Bitcoin isn't going to go below 90k, or is it just, you know, purely speculative? Or we think Bitcoin is going to hold up? Yeah, we'll have a look at TradeLight. Let me just bring back the XO indicator trend scanner again. So the daily, this is a slight concern here. So look, again, we're hovering below the 1225 daily. So it's really choppy right now. But like I said, this is the range that that I hope we still oscillate in whilst the moving averages rotate back up again, and then we get the move up. That's what I'd like to see. Let me just log into Trading Light. What the flying fuck? There we go. All right, so Trading Light. For those of you asking again, let's just map this out properly now. So let me just mark out the chart. I'm going to just wrap up on this because in terms of actionable trades that I'm looking at and how I think about this now moving forward, I've already caught the trade from 93s, just under 93 to 101.8. I've closed out the remainder at 100. I'm looking for another long opportunity. I took an intraday short, closed that out. So in terms of actual confluence or with Trading Light, the high is December's high, the low is December's low, okay? The mid of this entire range on the December's range is this here, right? So we've got our mid defined. So we've mapped out the range. The next part is, all right, we've got this demand zone over here, which starts at 90.5 and it goes down to 86.5, okay? Now, if you've learned anything from what I've shared previously, I'll probably use the wick of this here. And in terms of trade execution, I would draw a low time frame range on that candle, on that demand zone, okay? So again, another way I do trade execution is draw a range on a high time frame demand zone, and there's your mid level, okay? Such that should price again come into this low, reclaim back above, and take out this, that's my execution to get into the trade. If it comes here, takes out that low, gets back above that mid, there's my low, stop at the lows here, get back above here, let's go, okay? That's how I use a range on a demand zone there. So just another subtlety that I'm sharing on stream today. Now, in terms of Trading Light, if you look at this, this is on the futures book. You have a fairly decent amount of stacked bids here, from 93 all the way down to that 85. That whole entire demand zone there, it's pretty stacked. Now, if I group this by 1,000, it doesn't really tell me much. And again, this is on the futures account, but I can gauge that should price trade into 92, 93. And like I said, if it respects this structure over here, this swing low here, where we just push in, but we stop short, you look for that shift in market structure. There's a break in microstructure. There's your demand zone. You can even bring it across. That's the level. Sorry, not quite as much as that, but that's the level what you want to see. You want to hit the long here, invalidation at the low, trading it up, okay, into this set of asks. From 92, 93 into 105s. If we go into the Bitcoin spot book, again, grouping by 1,000, we can see that the highest nodes here are coming in at 90. There's 357 at 91, and there's 431 and 92. So again, the key to using heat maps is that one, like I said, you want to see price, okay? And we'll cover this on the streams and the private streams, price trading into this zone. These passive bids absorbing all that aggressive selling, okay? What you don't want to see is these bids getting pulled and price shitting all the way through it. If there's aggressive selling, market selling into these passive bids, and these shorts get trapped, price starts pushing away, what would you do if you shorted at the lows and price is pushing away? You're going to close your shorts out, aren't you? And then eventually you're going to get momentum traders piling back in. Then we've got the liquidity to the upside. All this here, okay? That's what I'm thinking about. So we're still in a bracketed environment between 110 and 90. That's the entirety of the range that we're still contained within. All right? That's what I'm thinking about. Does that make sense? So it's not evidently clear. Like I said, it's a bit dicey. I can't get a clear read where price is going to come next. And I could be wrong. I could be completely wrong about price trading lower down. For whatever reason, we might trade above. There's Monday's low, there's Monday's high. We might just stop at Monday's mid, reclaim back above Monday's high. Does that mean we go back to all-time highs? There's that possibility that you have to think about as well. Not a trade that I would personally take, but it's there for those of you who wish to do so. Your invalidation is essentially Monday's mid-range. If you think this is low in here, then Monday's mid-range is your invalidation point. It's just like another range, pivotal point. Get a rally, lose it, opens the probability we trade the lows into Monday's lows, okay, at that 92, 93k level. And like I showed you on the heat maps, there's a stack of bids resting there. You want to see them absorb any aggressive selling. All right. XRP, I would absolutely love to short this one more time. I think this is pretty much fucked, if I'm honest with you. If you look at the 12 and the 25, they're squeezing, okay? What I would love to see is price trade back into this range here. Please give me anything in here. Rejection again. I will short this back down into this, trading it down towards this at that point. Not shorting it in one trade, but short into a level, bounces, short again into that level, inverse the chart. That's what I would do. Give me that higher low, another higher low, keep going, breakout, slam into there, $1.40 at some point. What makes me believe that we could see price pushing higher in this instance is the fact that I feel as though the daily stock is pretty much done at this point. The question is this capping price, okay? Or are we going to get a drift down and then one more push up, lower high, into that supply zone again, and price rolls over? We'll have to wait and see, essentially. But I do feel as though we are very close to a top on XRP. If you look at the Bitstamp chart and UTC USDT, XRP USD. I mean, like I said, time and time again, when you see rejection of wicks at a key level, that is a sign of weakness. So I would love to see price, I don't know how, but I would love to see price push up into that $3 level one more time. It may not happen. We might just get 290s rejection. I'll be looking to short this back down into here, that 160 level. So that's kind of my hedge against the market going to shit, is if the market's going to go to shit, XRP is going to go to shit even more. That's how I would view it. I've already had one fantastic trade into these lows. I would love to get a second trade on this into 160. So this is just another way that, look, if I don't want to short Bitcoin, but I want to get some short exposure just in case the market goes to shit, then XRP I think sets up nicely for that, for the optionality of being long Bitcoin, short XRP if we see rejection. Solana, I personally, I mean, don't quote me on this. I really think the high on Solana is in. I said that don't be surprised. I think I tweeted that one more move up. Our price was down here, and I said one more move up, and that's all we get on Solana. So I really do think there's a good chance the high might be in here. I'm sorry to say it, but it really could be in. My only hopium, and what I'd love to trade, is something similar to this structure here. So if you look at Solana, right, what it generally does is, oh, fuck's sake. Price rallies from, I don't know, 150 to 260. Aggressive sell-off, guess where to? 180, right? That same level that we had in 2021, where everybody was bullish. I openly flipped bearish on Solana at the highs, and I said I think the top's in, and I started shorting Solana. And what I was looking for was one more push up into this level here to really start getting aggressive, okay? With the breaking structure. Break this structure, that's it. It's game over. Into that structure, start breaking down. That's pretty much cooked for me, okay? There we go. Clean price action. But what's interesting or fascinating about this is if I just clean the chart, or let me just, if I do that, yeah, there we go. It's that 180 level again. Okay, when price was at 260, it fell back into that 180 level, sorry. Now, if you run it forward to where we are today, where did price bounce off the other day? That same level that we had from when? 2021. It bounced, spiked up, and then it rolled over. That 180 level is massive, the way I look at it. So what I'm thinking in this instance is, are we likely to see something similar to this, where, yeah, this was kind of the fractal that I was looking at, where we get something similar to this. Okay. Are we going to get one more push up into a lower high, and then it rolls over into a lower low? There's a lot of supply up at 300. From 260 to 300, there's a fuck ton of supply, if I correctly recall. If you look at Solana USD T on the futures pair, there's a lot of overhead supply, but I think there's even, I think it was on the spot pair that we covered where it was really stacked up. Yeah, it was indeed. And if you look at this, and this is one of the reasons why I sold my Solana. My average exit, I tweeted about it as well on the 19th. I believe the top on Solana was on the 19th, yeah. 275 is where I exited. The minute I saw the asks flood in, I was like, no, fuck that, I'm getting out of the market. There's no way we're going to break through that. And there's a lot of stacked sells there. There really is. So the question I'm asking myself is, it's difficult for me to get bullish. When I say bullish, I'm referring to Should I buy Solana here and hold it for the next 12 months? I can't get bullish behind that idea. But I'd never said I'm bearish. What I am looking for is, can I get a long into this level and we get a rejection? I'll happily short this back down. If I miss the long and it comes up here and I get a rejection, I'll take on the short. It's not, oh, XO's being bearish. The market is telling me that if we reject from this level and there's a fuck ton of asks up here and we can't seem to break through that, and all those asks absorb aggressive market buying, what do you think is going to happen to these top buyers here? They're going to puke, just like they did on XRP. Buy at the top, you pay the price, you get fucked. Okay? So if there is a rally, and I hope there is, that's what I'd essentially be looking for, essentially. And if it goes higher, fine, I'm happy to be wrong. It's just an opinion. I think there's a good chance the top could be in, or the near-term top, I should say, could be in on Solana. I don't know where we're going to go lower down, if we are going to go lower down, but that's just my opinion. Again, if you look at the XO indicators here on the trend scanner on the daily, we've got to get above 226, 227. If you look at the weekly, oh, that's starting to compress, right? If you look at the compression of the bands, you look at the dissipation of the momentum, and here's where I think it's definitely going to be troublesome, is that if the bands start compressing and Solana rallies one more time and then gets under that's it. I think that's a shift in context, and then we get the trend down, possibly wherever. Okay, that's what I'd be thinking. So from a pure price action, from a range perspective, I think this is the range to focus on Solana. You've got these highs at 260. You've got this definitive lows here at 77. And somewhere in there, you're probably going to get a very clean mid-level, give or take. Give or take, okay? That's the range to play on Solana. So again, when I look at the asks in the order book, and if they don't get pulled and price trades into those and they absorb any aggressive buying and the market can't seem to push higher, we've had one rejection from here. We've had another one from here, which sold off. We've had two long wicks, okay? Any push-ups into here for a lower high, I think there's a possibility we get a lower low. And you've also got the break in the trend line, so not the best trend line, but you kind of get the gist. That if there is inherent weakness in the market, and this isn't just Solana, but across the board, if there is inherent weakness in the market, then you've got to ask yourself, what next? Okay. Do you then cash out and wait for a good buying opportunity in the future? Remains to be seen. Okay. I hope I'm wrong. I hope it goes higher, but I'm only going to trade what I see on what the market reacts to. So, I'm not calling the top. I'm just saying if there is enough evidence that we see a rally and exhaustion, then I will be looking to short. I'm not going to hesitate shorting that. All right. So I think we're going to wrap it up there. Ethereum, I mean, what can I say? What a pile of shit. It really is, but it's traded into what I would hope was going to hold. And again, just an example of I'm wrong. I really thought Ethereum would have held this level, but the market had other ideas and there was huge liquidations. And here we are on a monthly time frame. Who would have guessed? Who would have known that Ethereum 2 years later, 2.5 years later, is going to be on its arse down here? So it's not a bad level. I hope Ethereum can react, at least give a bounce back up to 0.45s if it can. Then great, alts could potentially rally into February and March, but we'll have to wait and see. I think the one thing that I would look out for, which it's Tuesday today, is that this is where it gets interesting for me. So this is where the higher time frame comes in. My question to you guys is, this candle here, what is this? What is the name of this candle? we traded, and this is on the weekly chart, we traded into this demand zone here, right? And we closed this as a weekly. What's the name of this candle here? Is that or is that not a weekly pin bar potential reversal? Fuck the SFP, I'm talking about the candle. It's not an SFP either, because this was a significant low. We've already taken these out and we haven't closed back above it, so it's not an SFP. It's a pin bar, right? To an extent. So rolling it forward to where we are today, something that I would look out for is, can we see a weekly close that closes like this? Very similar to what we had, into a high time frame weekly demand zone, because this was the weekly block which kickstart the up move, pull back and rally higher. So just something to watch out for. So I will cover Ethereum on the next stream. I just want to see how this plays out, and if we get a move reversing back up to that 0.4, potentially 0.45 level over here. Okay, so what is that range? That range that I'm looking at is this here: range high, range low. Clean chart, range high, range low. I would say there's a very good chance now that hopefully this was some form of capitulation low on ETH BTC, and that we see a reversal over the coming weeks. Very, very high relative volume selling node. Okay, very, very high. It's not often you see something like this, but that was fairly extreme. Okay. A few requests for total. We'll have a look at, I mean, we'll start off on total. What can I say? Still above the previous all-time high. It's still holding in there, so that's a good sign. It's a different story if we get back below it. And if we get back below it, then Bitcoin is going to go below 90k. It's as simple as that, really. If this holds and we backtest and push higher towards the highs, then great. But again, nothing I can gauge from this other than what I alluded to, that I've started a new challenge account. I think we're in a rotational environment. I'm looking to play the rotations. If that's back and forth, and then that's what I'm looking to play, the rotations in the market. We're not in a trending environment anymore, guys, okay? We are in that rotational environment. If you look at total 2, that's kind of what I'm leaning towards. Total 2, I mean, again, if you just look at the XO trend scanner, it's hanging in there, but this is why I've got some concerns around altcoins. I think altcoins will always give you opportunity, but this is really becoming a concern that if the bands start compressing, price breaks above and then back down, I think that is probably going to be troublesome for many, many altcoins, okay? And it's probably no different on total 3. Not great, not great. You can see when price starts slamming into the bands, okay, it can stay lower for many weeks. Again, trajectory to the upside, aggressive selling into the bands, holds above it, consolidates. You probably call this a phase of redistribution, and then you get the breakdown. So are we now shifting into a phase of redistribution on altcoins? I don't know. I don't know the answer to that. And I think a lot really depends upon Ethereum. But time is ticking, because generally by the end of Q1, markets have generally gone to shit into Q2 and Q3. And in Q3, you get those good buying opportunities again. So I am just remaining balanced. I don't have a bias. I'm aware of the downside risks. I will trade the shorts if they set up. And equally, I will trade the longs if they set up. It's a very disjointed market. Bitcoin has shown great strength. Ethereum has gone to shit. XRP is still hovering at the highs. Ethereum is down at the lows. I can't make sense of the market. If you guys can, then great, but I can't. So for me, it's a question of just trading each market for what it's worth. Gone are the days where everything moved in lockstep and tandem. The correlation in crypto used to be tight. We are in an environment that is very, very decorrelated to Bitcoin. That much we know for certain. Bitcoin dropped from 97 the other day, from 99s, 97s down to 92. Ethereum went from 3,000 all the way to 2,000. So go figure. Go figure. Ethereum, man, I don't know what to say. It's if we get a backfill of the wick again into that 25th percentile, break of the trend line, then I will probably look to swing long. For now, I suspect that we will just get a very much rotational type of environment on Ethereum. I can't really say much more than that. You just have to wait and see what price gives you, essentially. But if you look at what happened here, when we fell down from a similar level. If you look at Ethereum back in July 2024, it was at 3,000, 3,400 level. Okay, isn't that essentially what was capping price in this instance? And again, we got the aggressive move down. We get the sharp bounce up. So in terms of the composite or the value area that I'm looking at in terms of a bracketed environment, I should say, is this region here on Ethereum. It wouldn't surprise me if this is the zone that we start trading over the next few weeks until we get a resolution either side of this potential bracketed environment. Okay, that's what I'm thinking. Now, the plus side on Ethereum is that the daily is at the lows, the weekly is almost at the lows, the monthly can't really gauge much from this. So again, is it a case of where over the coming weeks we are likely to trade this range here? Okay. If it's at the range lows, if it comes into this level here, I'll take on the long. Okay. Into the range quarter, back down until we get a breakout momentum back to the range highs. We'll have to wait and see. Long way off that just yet. There's significant price action that I need to see to get some sort of trade setup going. Right now, I don't have anything clear on Ethereum. What did I? Yeah, I did mean that. I think I was bullish on it. So if you remember on the previous streams, this is what I had. I'll just reflect. So for me, I said that, look, as long as Ethereum can hold these lows here, is this another inverse head and shoulder? The minute we got below 28, I had to get out. I literally genuinely got out got out, and that was it. That's all I could do. I had to get out of the market. The minute we broke through that level into 27s, I sold all my Ethereum at a loss because my average cost basis was around about 3,100. So this was my average cost basis. This is where I had to get out and I had to take the loss. Okay, and that's just life. But at the end of the day, when I look back in hindsight, I was very pleased with how I managed the trade. And sometimes when we look back, it's like, thank fuck for that I got out of the position, because what followed soon after, it's pretty horrendous, okay? And there was no guarantee that price was going to bounce up. And it's come back into that 2,800, where I guess anybody who's bought is just looking to get the fuck out of the market at this point. So this is a key level of resistance. So the next question I have is, again, Monday's low and Monday's high. Is this the range on Ethereum over the coming weeks? And we have a fairly definitive mid-level. That's Monday's range. And again, if there is a backfill of this wick, potentially I'm not sure if we're going to get down there, but potentially into perhaps the range quarter of 22s and back above the mid. I may look to take that trade back on again. Okay. Well, I said this was going to be a short stream, but surprise, surprise, it isn't. But I hope you found that helpful today. Okay. Any last questions? And we're going to wrap up the stream. Thank you, as always, to everybody for tuning in. I really appreciate you all tuning in. If you can hit the like, that'd be great. If you want to leave a comment in the chat, please do, or leave comments in the description. Let me know your thoughts. Let me know your criticisms. Let me know if you want to troll me. By all means, go ahead. I'm fairly thick-skinned. I couldn't give a flying fuck. But I do find the trolls entertaining every now and then. So please do remind me of how shit I've been over the past, and that I don't have a 100% trading record. So you're more than welcome to trash me. But no, in all honesty, look, thank you guys for tuning in. I really look forward to running with the group for 4 weeks, and then I'm going on a very good break off socials for a good few months and focus on trading the markets, and doing some side projects as well. All right. Take care, guys. God bless, and have a great week ahead. Bye-bye.